And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. A rather shortened holiday period. We did end on a somewhat negative note. However, the shift that I talked about in last week's show is continuing to take shape, as is other price action and money flows moving into newer areas. From here, I did want to share with you not a lot by way of economic data last week, but next week, key employment numbers for the month of December will be released on both Wednesday with private employment data, and then Friday, broader employment numbers will be released. And the significance here is that the Federal Reserve has announced that they will be paying very close attention to employment data as a way to gauge inflation. So I am expecting an impact in interest rates depending on how those numbers come out. Now, from here, let's go ahead and take a look at those markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500. As noted, we did end down just a bit here, and the broader markets closed just below this key 50-day simple moving average. Of more importance here at this time is the fact that both the RSI and MACD are in negative territory. This is signaling near-term negative bias, although today, let's go ahead and take a look at the Nasdaq, because the Nasdaq overall has been holding in better. We did not close below this key 50-day simple moving average. It did outperform the S&P. Today, we are seeing vibrancy with a potential double bottom formation and a positive RSI and MACD. So a bit of a divergence as we move through today's show. I will share with you why and where that strength in the Nasdaq is emanating from and key news that is driving that. So from here, let's go ahead and take a look at the 11 underlying sectors in the S&P 500. As noted in the past, I use a 2-month daily price chart view here, and then sort the sectors by relative strength indicators so that we can get a sense of where that relative outperformance is shaping up relative to the S&P that is sitting in the middle of the overall sector ratings. Now, last week, we were dominated by growth areas up here at the forefront, and we are still seeing that. Technology up here, XLK is the ticker symbol, and the group is back up above that 50-day simple moving average, a lot by way of volatility here, but generally speaking, we are poised to potentially trade higher. XLY is the consumer discretionary sector, and you can see we are poised for that RSI to turn positive here after this week's pullback. I'm also going to share with you some of the growth areas that are exhibiting pullbacks that could be viable. Now, newer to the forefront here are utility stocks, XLU, often thought of as a defensive area, but there's a sound reason with news this week that I will share with you, and also point out and highlight a couple of names, a lot of it having to do with the AI trade coming back on later in the week, but also specific to one utility name that is certainly a leadership name. Also, as we move through, you'll see energy up here at the forefront, and the group was up 3.6%. Not the prettiest chart, but this is where I'm going to talk about a continuation rally that began last week. This is a concept for those of you that haven't seen it. Go ahead and take a look at last week's show, because we were reviewing a number of these oversold sectors. XLE is the energy sector, and you can see that that RSI did get down here below 30. We did exhibit, it was up 3.6%, the strongest sector this week. And the area that we talked about last week, most notably natural gas, did experience a continuation rally. I'm going to share with you this week's view of those charts. Now, again, it's not the prettiest chart. We are poised for a V-shaped recovery, but we do have a MACD black line up through the red, signaling a potential new uptrend. We can go back to this period. For me, in my work, it does get more interesting as this MACD moves up closer to this net neutral and poised for positive territory. But again, the names that we shared and looked at last week are faring well. We'll take another look at them. And then also from here, let's go ahead and take a look at some of these other sectors that are also having a bit of continuation rally price action. Last week, we talked about healthcare, another deeply oversold area with that RSI on XLV getting down below 30 and trending upward. However, we did get that MACD crossover last week and a bit of a continuation rally. It did close the week up just a little relative to the broader markets that closed down a little, but we'll take it. And again, on the lookout for a potential healthier return to an uptrend. We're not quite there yet. And also, I did want to share with you the S&P 500. We're going to just go back a step here because we are in a negative near-term period here. I talked about that, but we will want to get these momentum indicators in positive territory and get that S&P back up there above that 50-day simple moving average before really putting a lot more by way of money to work in the markets. Now, looking at some of these other sectors here, I did also want to highlight those negative areas. And quite simply, we can see XLB, this is the materials. It will encompass gold and other basic material names, and it was down over 1%. So remaining in a downtrend, you can see these weaker areas were unable to exhibit much by way of a potential continuation rally. This is XLI, still very much in a downtrend here. So it is a very selective market, and those of you that are astute and really quite adept at trading, you can take advantage of some of the moves back into what I'm calling the AI trade, and that will be revealed as we move through. From here, let's go ahead and take a look at some of the underlying areas beneath those 11 sectors. I use ETFs that are really quite good as far as keeping you on top of where we are seeing money flows. And again, 2-month daily price chart view. And we don't want to see this, but this is TNX, that yield on the 10-year treasury, and it was up here at the forefront. We did end the week at 4.6, so a little bit below last week, but we are remaining elevated. Any number on that 10-year above 4.5 is viewed as elevated, and it will impact specific areas of the market. Let's move through and take a look at some of those areas. But before we do that, I did want to share with you a view of the semiconductor group, SOXX. Now you can see that we did close back above this 50-day simple moving average, that MACD just getting into positive territory, likewise with the RSI. So we are seeing a little bit of vibrancy here, certainly with today's 2.6% rally. We are not back in a full-fledged uptrend. However, you will need to be selective if you are anticipating this to go higher. There are select names. I will share one of them with you. And it is the only name currently on my MEM Edge Report as a buy, but I am going to be adding at least one more name this weekend. If you haven't already, use that button below to trial my twice weekly MEM Edge Report. Here we are with Taiwan Semi, TSM. The stock did execute a base breakout today, nice volume on a holiday shortened period, and bullish RSI and MACD. So moving back, taking a look at some of these sub-industry groupings here, let's go ahead and take a look at some of these other areas that are remaining weak. And these are going to be more interest rate sensitive. KRE, that banking area, down again just a bit this week. Also, home builders, very interest rate sensitive, also trending certainly at least flat for the week. Also taking a look at more of a risk on area, we can always take a look at the small cap Russell 2000 index, and it did end the week up about 1%. So that is good news. Most of that taking shape today with a 1.5% rally in small caps. And it is generally used as a proxy as far as the investors' potential appetite and confidence in the broader markets. Elsewhere from here, we can see just a lot by way of volatility here. This is IHI also having a good day today. Medical products up 1.5%, the growth area of healthcare. So we are seeing a bit of firming up, but net, I can see that we are seeing a lot by way of, again, selectivity as far as where money flows are taking shape. Also here is a look at the IGV Tech Software ETF, and it is still struggling. We did see again today a nice 1.5% rally, but we are still below that 50-day. That RSI and MACD still in negative territory. This is a highly interest rate sensitive area, negatively sensitive. So we may see pressures continuing in that overall software space. Another area that we can take a look at as a proxy for investors' confidence or appetite for growthier areas is taking a quick look at Bitcoin. And I'm using the view from the initial interface page on Stockcharts.com. And we are looking at Bitcoin to that US dollar. And you can see we are back up above that 50-day simple moving average, RSI, in positive territory, just on the cusp of a MACD crossover. So we could be setting up for a nice continuation rally in Bitcoin going into next week. And by that, we can then, of course, use that as a proxy for potential move in the broader markets. So here we are with that initial interface page. And from here, you can simply ask to see crypto. And it does have the larger, more actively traded Bitcoin up here. And we can see that Ethereum was up 4.5%. By clicking that, we can then go ahead and get that daily price chart. And here we are with that view. Now, I talked about that move last week into nat gas. Let's take a look at two of those three names that I shared with you last week. First up is EQT. And this is what I call the Trump trade. It has a lot to do with global warming and climate activities and Trump's predisposition that is very different from Biden, and it is viewed as bullish for these stocks. We had that gap up into a nice rally, and EQT is very close on the cusp of a $48 base breakout. But let's take a look at this nice MACD crossover and then that positive RSI. Another name that we did take a look at last week, and we can certainly share a view again this week relative to a flat to negative market. This is Williams WMB, another natural gas. And if you haven't seen the show from last week, go ahead and take a look at that, because I did share some of the other reasons why these stocks are on the move higher. We can see WMB back up above that 50-day. This is what we were on the lookout for. Nice volume relative to the broader markets. And then that MACD just getting into positive territory coupled with that RSI. So nice vibrancy in that area of the markets. Also last week, I talked about that move into utility stocks. And certainly there are two leadership names for various reasons, but one of the reasons for that move into utilities was Constellation Energy, CEG. On Thursday, they announced a $1 billion contract with the federal government to provide and supply nuclear energy to over 12 government agencies. And this was big news. You can see this big move on Thursday, a nice continuation rally into today that pushed that RSI into positive territory and that MACD black line up through the red, signaling a potential new uptrend and nice high volume here. One other energy or utility name that I would say you need to know about is VST, and this is Vista Energy. You can see it had been a big winner going into the end or mid-January, and then we are seeing a downtrend reversal shaping up here. Take a look at that MACD heading north here on last week's move, and also likewise with that RSI, and this is a very AI related, also nuclear play. One last name in this nuclear space, but I will tell you it is highly speculative. It is a nuclear power startup, and OKLO is the ticker, but we had a big move today, up 25%. And we can see that with that sharp advance, we are very close to a potential base breakout, very high volume. And again, you can see that it is quite volatile, but when it gets going, you can see sharp advances, and it's also a proxy for other nuclear stocks. Another stock that I did want to share with you is taking a look at Tesla. They did announce their car delivery numbers this week, and they were disappointing. You can see this sharp drop in response to those numbers, but we did get a rally today on Tesla, a nice 8% advance, erasing this, very much centered around an big Wall Street upgrade and also bullish China EV sales news. So what we can see is that we did have that RSI regain its positive bias, and then we also have that MACD still up here in positive territory. Very helpful when looking at these names that have these sharp drops and then a reversal is to go ahead and drill down to that intraday just to get a bit more as far as potential near-term bias. So I'm going to go ahead and pull up a 1 hour chart from the mirror. We'll drill out to a 2 hour. But of note here is that we did get into an oversold position with that RSI below 30 for Tesla on that sharp drop on their delivery. And we did decline going into the release of those numbers. Now, coming out of that oversold, it's not, in fact, from here, we can go to a 2 hour chart and you'll see that this oversold condition, and it's taking us back to the end of September. It's not a common occurrence. So when we come out of an deeply oversold position with that RSI below 30 on this 2 hour Tesla chart, you can see that the advance potential is really there. We are seeing a MACD black line up through the red crossover, that RSI poised to turn positive. We're not quite there yet, but keep an eye on that shorter term chart will provide you with insight for the near term potential for Tesla. That's it for this week. Happy New Year to you all. If you like what you've seen, go ahead and hit that like button. And again, use that trial button. I will be talking quite a bit more about the markets and what I'm anticipating going into 2025. That's it for this week.